Okay, hi everyone. Today I'm joined with Rory from Capitalise. Hi Rory.
Morning all, how are we?
So Capitalise are a partner of MAP and we are working with our clients on effectively shoring up balance sheets, and there's a number of ways that we do that, and we just want to run through today some of a bit of an update on the market and the challenges that businesses generally are facing in the UK and how that affects MAP clients, and then some tools that we've got available to our clients to help you with anything to do with basically improving the balance sheet of your business. So being better capitalized, having more cash and building more resilience into your business. So we're only going to be probably 15-20 minutes today. We're going to cover a demo of Capitalise Business Pro that's available to clients of MAP. And at the end of this, I'll give you a link so that you can sign up to Capitalise Business Pro if you want to. So without further ado, over to you, Rory.
Morning all. So before we go into the demo of the product, it's quite helpful to kind of see the lay of the land from a macro perspective and where we are. So what we have is a pretty volatile market. Businesses in general, 40% of them will have less than 3 months cash flow or less than 3 months runway in the bank. And we are seeing that insolvencies are on the rise and the lending market is changing a lot. If we think back to March 22, the Bank of England base rate was at 0.75%. Today we're at 4%, and obviously that has a knock-on effect into the funding, into affordability metrics. But what we're seeing at Capitalise, we are seeing that there is demand for businesses looking to grow their businesses, looking to shore up their balance sheet by getting funding onto the balance sheet. And what's interesting is out of the inquiries that we're seeing, businesses are actually looking to get funds into their account pretty quickly. This is probably quite reflective of what is a volatile landscape. And what we want to do is help you prepare early. Typically, if you look at SME borrowing behavior, you'll leave it until you've got 7 days left of cash. You might only have time to spend 1 hour looking for funding. And naturally, you might only approach one lender, being your high street bank. At Capitalise and through MAP, you've got access to the full funding market through one application. So we can help navigate that market for you. And if we think about things like energy price hikes, these interest rate increases, naturally the affordability metrics have tightened and lenders are being more cautious. If we couple this with what's going on in the credit score world, which is what we're really focusing on today, the average business credit score has dropped by 9%, by 9 points. And actually this might not always be your fault or the sector's fault. It could be knock-on effects from what's happened in COVID. And then fitting into this as well, the minimum business credit score that you need to have to access borrowing or new funding is also creeping up, meaning that it's more important than ever to be tracking your score. And actually you're 6 times more likely to get the right funding at the right price if you are building these habits around your credit profile. And interestingly, I'm not sure how many of you know your credit score, but statistically, 29% are aware of it. So it's definitely something that's probably more important today than it was, historically. Interestingly as well, so we all know that cash is king. We are starting to see late payments and bad debts arise. 87% of invoices are being paid late. The average amount of time a business is waiting to be paid has increased from 1 day to 32 days since November 2022. And while you're running your business, you may not be fully aware of the amount of money that you're spending. And one stat which I thought was pretty interesting is that across all UK SMEs, 56.4 million hours are spent chasing bad debts and trying to get that money back into your business. So the tools we're going to go on to will kind of help you get in front of that and hopefully save you some time.
Just to add to that, Rory, if I was to give my summary as well, effectively we're saying that cash is tight across SMEs, and then that coupled with higher interest rates and it being harder to borrow, and finally still having the issue of late payments, that's what's creating the squeeze, isn't it? A mixture of all those areas, and they're the things that we're effectively covering with Capitalise Business Tools.
Exactly that. So we'll kind of help you get in front of those problems. And this is quite a good example. So we'll show you kind of the cash flow cycle of a business, and then we'll go into the tools and how each part acts as a solution. So kind of, imagine you've won a new contract, and perhaps you haven't done a credit check on the new business that you're going to be working with. It's a really exciting contract. It's going to grow your business, really exciting. But perhaps you haven't forecasted all the costs, and maybe this debtor ends up paying you later than you expected, meaning that, cash is tight, you've got your payroll to pay and so on. And suddenly you're in a position where you're looking for funding, but you haven't fully planned it. You didn't envisage the cash flow gap. You haven't been tracking your business credit score. So either, you're looking at expensive borrowing because your credit score's not in the optimal position, or there's kind of no affordability. So what we want to do is help you break the cycle, build consistent habits, meaning that when that moment comes, funding is often a timing piece, but we want to make sure that you're in the best position possible to access that funding. And also, really importantly, as Paul alluded to, we don't want you spending lots of time chasing your debtors and going through court proceedings around bad debts. At Capitalise, we do have a solution there that can help you recover any bad debts or resolve any contract disputes. But hopefully, by tracking your debtors, you're going to be one step ahead and more robust as a business.
So just to be clear, I know you're going to come on to it, but this is about monitoring your own credit score as well as being able to credit check your customers.
Exactly that. Spot on. And then this is kind of a visual going back to that first slide in terms of the kind of lending market. If you look at the first blue dotted line, that is kind of where the benchmark business credit score is to access unsecured borrowing. And actually, digital agencies, by the nature of businesses, you're not holding lots of tangible assets on the balance sheet. So typically you will be looking at invoice finance or unsecured loans. And actually that credit score is even more important. So just to be clear, that top blue line is the score that you need in order to be approved for any kind of unsecured borrowing. And the higher you go from 45 out of 100 towards 100, the lower the interest rate you're going to get and the more you're going to be able to borrow. If you look at the second blue dotted line, this is about your ability to negotiate credit with your suppliers. And actually, it's an area that's often overlooked. So if you were working with 4 suppliers and you had an optimized credit score, you could go back and negotiate more credit limit. Effectively, that's free working capital for your business. If you extended, the credit limit by £20,000 across 4 suppliers, that could be much more cost effective than you actually going and looking for a loan. So yeah, ultimately what we want to do is help the lenders say yes more and make sure that the borrowing that you are getting in place is affordable, and if not, help you negotiate better supplier terms so that you can get more working capital into your business.
So basically summarize that into these 3 areas that MAP work with Capitalise on behalf of our customers and in collaboration with our clients. First one is funding and borrowing. So being able to make funding applications, as Rory says, across the market, not just being restricted to 1 or 2 lenders, but Capitalise will actually take our combined application that we do with our clients and put that out to market to see what's the best deal on the best terms that we can possibly get for our clients. So any type of funding, invoice finance, term loans, etc. Secondly, debt recovery. So this is on a no-win, no-fee basis. If you've got bad debts in the business, either you've written them off in the last 3 years, or you think that they probably need writing off and that you've exhausted all the avenues from a relationship perspective and doing the standard credit control, then we can go through the court route there on a no-win, no-fee basis through debt recovery. And then thirdly, and the area that we're focusing on most today, is credit monitoring. So Rory's about to take you through the Capitalise Business Pro tool, which effectively enables you to both monitor your own credit score, so you can look for any issues there, and collaboratively with MAP we can look for any issues and how we might be able to resolve them. And then secondly, really importantly, and this is from recent experience that we've seen it go painfully wrong for a client as well, that wasn't credit checking their customers. You know, they've done, I think, £30,000 worth of work that they are struggling to get paid for, or they were struggling to get paid for. They've now been paid, and it was all because, you know, this was a business that I don't think they even had a limited company, and they hadn't credit checked this sole trader effectively. And if you'd done that, I dare say that either they wouldn't have taken that customer on, or they'd have been asking for upfront payment. So this is absolutely relevant and something that I'm really passionate about. And Rory's now going to give us a spin of how the platform works.
Yeah, so I'll jump onto the product now, so you can see exactly how it works. It will be the exact view that you will see once Paul has shared the magic link with you. But this is just one final example to kind of put into perspective how that credit score can impact the cost of borrowing. So on the left, you've got an example of a business that's borrowed £250,000 at an interest rate of 4%. And on the right, you've got a business that's borrowed £250,000, again, over the same term, 60 months, at an interest rate of 15%. And interestingly, the total cost of borrowing between the two is £80,000. Now that is based on the, going through the full loan profile, but it's significant, and which is why, this is really important. So I'm going to jump onto the demo site now. So you can see exactly kind of how the tool works. So when you log in, you'll see a home page. So you'll get kind of a summary of anything that's changed in the last 30 days. As your credit score increased, credit limit increased. If, for example, you had a live funding application, you'd be able to see any updates from either MAP or from the funding specialist at Capitalise. But really where you start to see the kind of value of the tools is if you click into your credit profile, you will see your consented credit score. So as a director, you'll come in, you'll sign up, and you will see a score out of 100, a specific score. When I say consented, as a director, you can come in, verify your score, which means that you get the exact score that lenders are looking at to dictate how much you can borrow and the price of borrowing. So it's slightly different to what you might see in the public domain. This is what your kind of key funders in the UK and also key suppliers will look at. You can also see exactly what's been happening over the last 12 months. And this is really important as well. So it's about consistency. Unfortunately, if you were sitting at a score of 20 out of 100 for most of the year, and then you improved it at that moment in time and went for funding, that probably wouldn't be enough for you to access the best rates. It's about being on top of this, building the right habits and keeping the score optimized. You'll be able to see what's changed in the last 30 days and also in the last 12 months. You'll also be able to have a read into kind of why your score is good, or maybe where there's area for improvement. You can have a little read of some of the data points that Experian are looking at, which are contributing into that score. One of which is,
apologies, Rory, just to pick up on something there, obviously the one that jumps out to me, annual accounts. The benefit of us working on this in collaboration is, as we submit clients statutory accounts at year end, we can then go into here and see, did that have the desired effect that we would have liked? Because there's lots of data points that are used by the credit bureaus, and they all use different data points to understand the financial position of the business at that point and whether it has a positive or a negative effect. And one of the things I've been really interested in, I've learned through this process with Capitalise, is that you can influence these credit scores by working with the bureaus as well. So I know you're probably going to come on to that anyway, Rory, but effectively if you've had a bad year and you're concerned about filing a year where financial performance is maybe not what it used to be or not what it is now following year end, then we can also submit year-to-date management accounts information to the Bureau in order to improve that credit score, and then we can see it live getting improved. So usually the credit bureaus are only working with public information, which effectively is very brief abbreviated balance sheets that are available on Companies House. We can actually provide them with more up-to-date, meaningful information where it's to your benefit as a business.
100%. I think you've hit the nail on the head there, Paul. And then kind of going back into some of the credit risk factors that can impact your score, I'm going to focus just on one here. So payment performance. So this is how you are paying your trade creditors and businesses that you're working with. Are you paying them on time? Are you paying them a bit later than industry average, and how that is affecting your credit score? So if we go down the page, you can kind of see an example here. So interestingly, certain businesses, it could be energy providers, large businesses, they have to report back into Experian on your payment behavior. And it can be something that can impact your credit score. So through this, you'll be able to get in front of this and see if there's a problem, and then we can look to rectify by going down the credit review service, which Paul was alluding to there. Moving down, you'll also be able to see what's known as Keys and Cato data. Effectively, this is looking at kind of any existing borrowing you might have in place, how your repayment behavior is affecting the credit score, and it will also look at your bank account. So effectively your current account balance and how that behavior is impacting your credit score. As you go down the page, you can see that you can start a funding application to the full funding market here. This will bring Paul and the team at MAP into the picture so that they can help you prepare and make sure that you've got those management accounts, make sure that the credit score is optimized, so that when we do go to market, you're in a position to get the lower end of rates and maximize the chance of an approval. But really kind of where we're focusing today is on the ability to track your debtors. So if you go down into check a company, what you'll be able to do is add in your key debtors, key customers, key prospective clients. Doesn't really matter which type of business, but once you add them in there, you'll be able to see their credit score, live changes. If their credit score decreases, you'll also be able to see kind of any insights or risks in real time. So if we click on this client, for example, you'll be able to see the credit score of the business. You'll be able to see the history of it over time. And you'll also be able to see kind of any risks there. For example, the credit score has gone down. There's a high probability of default. So this is a really good option for you, especially if we might be going into a slight economic contraction this year. This will help you stay ahead. If late payments are going up, if you can see and have that information at your fingertips to see where you can be giving more credit, but where you need to be tightening, and in the worst case, where you shouldn't really be working with that business in the first place, it's going to be a really useful tool to help you stay kind of one step ahead. Paul, did you have anything to add on that?
Just to validate what you said, this is once you've uploaded those customers or prospects, they stay there then and they're live. So this is great for prospecting and considering taking on new customers in the first place, but also if you are going to take them on, what credit limits do you feel comfortable offering to them, but basing that on real informed data, not just a gut feel. So I think that's really key. And then being able to maintain that information and keep it live ongoing for existing customers as well. Would you mind just showing us, Rory, just quickly how a customer gets added to here?
So it's really simple. You just put in the company number of the debtor or prospective customer. You just type them in, and then you'll be. This is a demo, but when you're on your site, you'll just punch in the company number, and you'll be able to add them in there.
That's brilliant. That's great. And obviously for existing clients using Xero, we'll be able to export all of your customers from Xero and add them in that way as well. So we can get a full list of all your existing customers if that helps, and even prospects from your CRM.
And then one final point, you can't see it on this as it's a demo, but when you log into your own Capitalise for Business Pro portal, you'll also see, so you've got the Find Funding tab here. You'll also have improve your credit score. So included in this, you'll be able to go through a risk-free credit review process. Paul alluded to it. Effectively, you know, Experian and some of these credit bureaus don't have enough information. So what we can basically do is supply management accounts, summary of your business, maybe explain something that they're not too sure on, and we will make a meaningful difference. So 97% of the time we can improve that credit score. And if you're using Capitalise for Business Pro, you're in a unique position where it's much more cost effective, and also it's risk free. So if we can't get that credit score boost significantly, you know, there's no you'll be refunded for that cost.
That's great, Roy. Thank you. Just to finish up, I think most businesses fall into one of the following categories. So either they're not currently tracking their own credit score and doing credit checks on the customers. They are doing it, but possibly not as well as they could be, or they're doing it really well and they're doing it regularly. In any of those cases, I suggest you at least check out this Capitalise Business Pro. You'll have seen from Rory's demo that Capitalise is powered by Experian. So even if you're in the advanced category of doing this well, you might already be paying more money to Experian than what this is going to cost you for this subscription. And even if it's on a like-for-like basis, I just think the Capitalise user interface is so much cleaner and easier to use than it will be using Experian. And then you've got the added benefit of the integration with being able to do your funding application, us look at debt recovery, and all of the other insights that come within this, as opposed to, you know, quite a no frills credit check report that you would get direct from an Experian or a Credit Safe or anybody else. Okay, super. Anything else, Rory, before we finish?
No, I think you hit the nail on the head there. Cheers, Paul.
Great, thanks for your time. I will share the link for you to look at Capitalise Business Pro for everybody if you want to. Obviously, feel free to reach out to myself or anyone at MAP if you'd like to discuss any further. Thank you.